Welcome back to episode 14 of the $100 to $10,000 series, where I invest $100 every month until my portfolio grows to $10,000. Since the new month is upon us, we have added another $100 to our portfolio, and this week we are up 1.92%, and overall we're up 15.21%. As you guys know, there are several ETFs that offer the S&P 500, but we are investing in Vanguard's S&P 500 ETF, and today I would like to discuss why I chose this particular ETF to invest in and what other options there are. There are three major indexes that track the S&P 500, and they are in no particular order: the SPY, VOO, and IVV. And these are the top holdings in each fund, with Apple, Microsoft, and Amazon leading the top positions because these are the three most valuable companies today. And we notice that the companies that are held in each fund is pretty much the same, which makes sense because they all track the same index. So let's go over the differences of each fund. So the first thing to note is that each fund starts with a different name. For example, SPDR stands for Standard & Poor's Depository Receipt and is managed by State Street Global Advisors. And if a fund has iShares written in the front, we know that BlackRock manages the fund. And if the name of the fund starts with Vanguard, we know that Vanguard manages the fund. And SPY is the oldest fund that started in 1993, and VOO is the youngest fund that started in 2010. Investors tend to gravitate towards an older fund like SPY rather than VOO because for those investors that have a significant amount of money invested in these funds, they don't want to move around the hundreds of thousands of dollars from one fund to another. And that's why SPY has the largest fund size. But the difference between SPY and its competitors like IVV and VOO is getting smaller each year because both IVV and VOO provide investors with a lower expense ratio. This is the annual fee that ETFs charge for managing the fund. So when investors go shopping for an index fund, they want to look for the fund that charges them the least amount because over a long period of time, there is a big difference between getting charged 0.09% each year over 0.03%. For example, if you invested $100,000 into VOO, in the first year, the total fees that you will end up paying for your investment is $30. On the other hand, you'll pay 3 times as much in fees if you put your money in SPY. And as you put in more money into your fund, this difference will grow higher and higher. And that's the importance of looking and comparing the expense ratio when you put your money in a fund. Despite this, there is another factor that leads to the SPY still being very popular today. As you can see here, the average trading volume on the SPY is more than 20 times the trading volumes of VOO and IVV. This is important for people that invest in the short term or for people that trades, because if you want to quickly sell your holdings, you want to go to the fund that has the most buyers. So for investors that want to trade these ETFs on a short-term basis, they should go with SPY. But for long-term investors like myself, we should put our money in funds like IVV and VOO with lower annual fees to maximize our profits over the long term. And that is why I have been investing in VOO in my $100 to $10,000 series. That's going to do it for this video. Don't forget to hit the like and subscribe button with the notification bell icon turned on. And I will see you guys in my next video.